Yes, so good afternoon, everyone. Welcome to this knowledge session on Indian cement sector. Um, Thank you for taking time out. So format is very simple. I'll start with the presentation to give you an overview of the sector and what are the investment themes. You can feel free to ask your questions anytime. You can either put it in the chat box or raise your hand. Uh, I will definitely take each and every question which comes through. So let me just start with the presentation. So the agenda is cement sector, but there are two things which really comes out. One, there's war between the giants, Adani and Ambuja Cement, for market share. And in the meantime, there's a lot of bags of opportunity that we'll look at. So cement sector generally is a very low risk investing, investing sector, and because it's a highly predictable business, and cycles are also relatively benign, and you can really predict what's going to happen. So not too much of unpredictability. It's actually an investor's delight because there's a saying that even if you go into a coma and wake up after, say, 20 years, nothing would have changed in the cement sector. The technology kind of remains the same. Everybody has the same technology. There's very little differentiation. People might have put in, waste heat recovery or, some addition to the main technology, but the main technology doesn't really change that much. Secondly, it's a low-priced, high-volume product, so it's very difficult to transport across, geographies. So it's not that tomorrow China can come and dump into India, and the window for the product to be shipped out of the factory and used is largely around 30 days. So if you don't use it in 30 days, it starts to consolidate and becomes unusable. At the moment, there are no known substitutes for cement, and especially at this price, there's hardly any substitute available. So unlikely there's any substitution risk. And historically, we have seen that governments have tried to regulate the price by imposing differential duties, etc., but it doesn't work at all. So there's a very limited regulatory risk also. So from an investor point of view, you don't really have too much risk to take care about. Now, sector has been a great value creator, meaning in last 20 years, Shree Cement is up 132 times, Ultratech 42 times, Ambuja is up only 8x, but market is up only 14x. So you can see that, there's a great value which has been created by the sector. When I compare it with steel, because steel is much more fancier, sector, and a lot of people are interested in steel. I compared Ultratech with JSW. Both are leaders in their space, both doing phenomenally well. In last 15 years, Ultratech has done 2x returns of JSW. So it tells you that, there's a little bit more money to be made in, cement sector as compared to cyclical commodities, which are globally linked. Now, one of the reasons is that Ultratech does a consistent ROE through the cycles. Not to say that JSW has done any worse. It's also kind of around that 12-13% ROE mark. But it's all over the place. So you don't know which cycle you are, and stock can be really volatile. And this is reflected in the valuations for both these companies. Ultratech is trading on average around 4.2, 4.3 time price to book. Currently, it is ahead of 5. And JSW on average is trading at half of that, around 2.2, 2.3. So people are willing to pay for predictability and consistency of returns. Now, the good part is that the sector grows very steadily, meaning as compared to GDP growth, the multiplier is anywhere between 0.9 to 1.1 times. So if you look at only few, years like the COVID period or, the global, I think it was the IT crisis in 2000, which led to a little bit of a slowdown in economy. But largely it follows the GDP growth. Between FY22 to FY 15-16, there was a lot of policy paralysis. Capex cycle was down. So you saw around 5% odd growth in the sector. But post-COVID, things have started to recover and Capex cycle is doing extremely well. So expecting around 8.5, 9% growth for the sector. Current year is an aberration. We are expecting around 5% growth this year because first half has been a total washout. For the first half, I think the growth would have been more like 2-3%, and the first quarter was washed out because of elections, and second quarter because of very heavy rains. And last year September was extremely strong because there was hardly any rains in September last year. So there's also a base effect which came in. So current year 5% demand growth, but on average expecting more than 8% growth for the sector. Now, capacity utilization, is keeping pace. So we are expecting capacity to go up from current closer to 580, 600 million ton to 750 million ton by FY27. Capacity utilization would be hovering around 70%. It did go down during COVID period, but largely for the last 6-7 years, it has been ranging closer to 68 to 70%, and that is where I think it should remain, given the huge capex that we are seeing. Now, normally I try to do demand supply balances for all commodities, but this is the moment when I lost all my faith in all the demand supply balances for cement sector. As you can see, post global financial crisis, capacity utilization dropped, but cement prices kept on going up. And this is actually the turning point came in 2004-5, which was the real bull cycle in cement industry. And cement industry made tons of money during that period. That is the period where industry became used to high profitability, and even when the demand actually fell, they were unwilling to let it go. So what really is driving this disconnect between capacity utilization and cement prices is largely pricing discipline. So the bull cycle happened only between 2005 to 2012, where the capacity utilization was in excess of around 85% plus, and demand growth was really solid between 8 to 9%, and prices responded appropriately during that period of time. But I marked a few periods where demand growth, which is largely the supply, has been 15%, but still prices have gone down. Those are two periods between 2000 and 2019. There are brief periods in FY14 and FY16 where this happened. So these are the periods where supply discipline broke down, and people were industry players were dumping at whatever price. So typically volume growth is not a great indicator if it is not driven by the fundamental factors which we are seeing currently. So currently, if you see that FY25, we have started with a dip in cement prices. And this is because the demand is actually pretty low. But I think we should end up with 1 or 2% lower prices for FY25 in the worst case scenario. Now, normally cement prices, track inflation. This is a good chart which Kotak Securities had in the report. And so when industry utilization jumps up beyond average, prices tend to go well beyond. So not a phenomena that we are expecting right now. So expect that prices would remain benign and would move in line with the inflation numbers that we see in the country. Also, cement prices have a tendency to move up in step jumps. So it's not that they're moving up and down every year. So prices were largely consistent between 1996 to 2006, 2004, I would say. And after that, it started to go up because of bump up in cost. Actually, transport cost increased quite dramatically in 2004 because government had abolished overloading of trucks, and that led to 80% increase in freight cost, which led to the first jump. And then there was this bull cycle that we saw from 2007, 8 to 11, 12, which actually picked up the prices to from levels of around 140, 150 rupee per bag to 250 rupee per bag. Then we had a lull period between FY 12 to FY 17, but cartel was active here and prices did go up. And we did have our finance minister try to tinker with the excise duty at that point in time, but it didn't really help, and people prices stabilized around 300 rupees. We saw a big cost push post-COVID, where energy prices really jumped up materially, and that has pushed the per bag price to around 380, 385. Um, if everything was going well, I was expecting that prices would settle at around 400 rupees per bag. But we have seen intense competition between the top two players. So the prices have settled at around 385 odd right now. And I think it will continue at this level for, a few years, at least 2 to 3 years. Now, currently, cyclical downturn is underway, as I was mentioning, but it looks to me that Q2 would be the bottom. So last year, Q2 was extremely good. On average, companies did 956 rupees per ton margin. This Q2, I'm expecting around 700 rupees per ton. So a drop of almost 200 rupees from the previous quarter. Q2s are normally weak, but last year was exceptionally good. We would see some recovery, but overall, I'm expecting that if we can do 1,000 rupees per ton EBITDA margin for larger companies, that would be a decent outcome for FY25. Now, stock re-ratings also coincides, jumps in cement prices. So we saw the three steps up in cement prices, and I've chosen ACC because ACC has been one of the kind of worst performer on volume growth. So the only thing which really mattered here was cement prices, and it gives you a good correlation, an idea. So what this chart says is that whenever cement prices are down cyclically for a short period of time, it is best to buy dips in the stock during that time. So because unlikely cement prices are going to come down materially, they are going to rebound. So probably utilize these dips at least for trading bets, if not for long-term investing. Now, while all this is good and we are seeing some competition, but the side effect is that we are also seeing a lot of consolidation. And we saw in that chart that Ultratech was doing closer to around 14-15% ROE. Consolidation is happening in the sector, and there's a good chance that probably ROEs can move to 220% plus, which could lead to slightly more, re-rating uh, as compared to where the stocks are trading right now. Now, when I look at top five players, for better part of the last decade, they were at around 45, 46%, on average, their share of capacity. It started to go up, around COVID. And now, post all the acquisitions that have been done by, Ultratech, which including India Cement, and the ones done by Adani, including Penna Cement and all. Now we are seeing the top five players are at 61% of capacity share. And when I look at future capacity, expansions which are going to come up, um, I'm expecting almost 100 million ton of capacity to come up in the next 3-4 years. And bulk of it is coming by three companies only: Ambuja, Shri, and Ultratech. So that tells you that this number is not going to stop at 61%. It's likely to grow up even further. Now, when I look at regionally, already top five players are much more, in terms of the market share, as compared to what you see for all India average. So North is already, 79%, West 72, East 75%, Central also 71%. It's only South which was 54%. And now we are starting to see all this consolidation happen in South India. So almost 26 million ton capacity in South India, which is closer to 15%. saw a shift to Adani and Ultratech. So probably you will see that this number has already gone up to closer to 65% or so, if not more. So apart from South, it's already consolidated. So in next few years, I won't be really surprised if we top 70% on all India basis for the top five players. So this is my expectation. You know, Now there are a few things which you can notice over here. Obviously, Ultratech has gone from 15% to more than 25% market share, and Shree has jumped from 3% to closer to 8-9%. Uh, Ambuja and ACC combined is the red line, which was coming down for better part of 2000, the decade before 2020, under Holcim. They weren't really able to grow that much, so they lost market share. It's on the left hand side that you really need to look. So they lost market share from around 18%. It went down to 12-13%. And now I'm expecting them to claw back to around 18%. So it will be still a far cry from where Ultratech is at 25-26%. These guys would closer to 18%. That is what it looks like over the next 3 to 4 years. Now, acquisitions are happening and they're coming thick and fast. So every few months, we are seeing some acquisitions come through. When I look at recent deals, they're happening between $90 to $100. And largely, I would say that the replacement cost is around $70. So 20 to 30% premium people are willing to pay if the assets are good. And so historically, valuations were much higher, but now they have kind of tapered off. And what you see below $70 are really sub quality assets. So only if the quality is good, then you can expect 20-30% premium over replacement cost. Otherwise, expect a slight discount to replacement cost, especially companies in South India who are not really doing that well. Now, when we look at the potential acquisition targets which are buzzing in the market, all these names are there. Sarashtra, Orient, Mangalam, Heidelberg, Deccan, NCL, Sagar. Even JK Lakshmi name comes coming in, then Anjani Portland Cement. I've earmarked, Orient and Mangalam. These are actually Birla Group companies. And they are also trading at reasonably good valuations now after the big run up that we have seen in both these stocks. Mangalam is at $78, Orient is at $84.8. Being a Birla Group with some cross holdings through Pilani Investments, etc., it's quite possible that Ultratech would be the front runner on these names. Probably in the next 12 months, we should hear something on these names from Ultratech, and some progress can be seen. I think given that they are doing decent, earnings, they are not stressed. Mangalam also recently won a big quota stone mine. So that valuation has not been factored here. If you factor that, maybe it's slightly cheaper. There's a possibility that the deals can happen closer to $100 for these companies. Now, so given the time frame, which is uncertain, and given that, what is your risk-taking capability, you can look at these stocks on dips per se. Then there are these names in southern India, which is Heidelberg, Deccan, NCL, Sagar, which can be, open for bidding by the other players also. Heidelberg, we recently saw in newspaper, ET was quoting some unknown sources that due diligence is going for Heidelberg, plus the unlisted company Zuari for around 10,000 crore valuation. So the unlisted company has around 7 odd million ton. Heidelberg, the listed company, has 6. So overall around 13 odd million ton. And they're talking about 10,000 crore. So 40% capacity is listed, and 4,600 crore is what is the EV right now. This comes to around 88.7. So if I was doing some rough maths, the deal as per the media being quoted, is around $92. So there's hardly any room left. Even if this deal is happening, we have no surety of whether the deal will happen or not happen. Uh, Deccan NCL look cheap. Sorry. Yeah, Deccan and NCL do look cheap at 50 and $59 per ton, respectively. And our earnings wise also they look reasonably okay. They've been in the market for pretty long. Not sure why they have not been taken. They are smaller capacities, so not as attractive as something like Heidelberg plus Juari, which is 13 million, or Orient, which is around 8.7 plus. They have 4-5 million ton of new capacity plants also. So it takes them to around 13-14 million. So these two are, I would say Heidelberg and Orient are the most important one from a buyer's perspective. JK Lakshmi, I'm not sure. If it were to happen, maybe it will happen at around $100 plus. Um, the company has good, it doesn't look cheap per se on earnings, but I think given its position in northern India, where limestone is not easy to come by, I think it can command more than $100 kind of valuation. I will ignore, Sagar Anjani and Saurashtra for the time being. But if there's some buzz in the market, you know what to expect from these companies in terms of valuations where the bids can happen. Now, leaders, the top five companies make on average 300 rupees per ton EBITDA, extra EBITDA margin. And this is driven by their brand. So they are very strong brand, so they are able to sell a lot more in the retail market. And they also have economies of scale. They are able to advertise better. They have better distribution network. They can do a lot more. And so we have discussed till now, two plays over here. One is that the top three companies are aggressively growing. They are capturing market share. Their market share is going up. They do better returns. And so if you are looking for, a long-term play and also looking to play a rebound in the sector, larger companies is the way to go. If you're looking for excitement in life, then maybe those smaller companies, which are possible acquisition targets, it will keep you busy, but will make you probably the same kind of returns. But if you get your timing right, maybe, higher returns in a short period of time. Now let's talk a little bit about Ambuja Cement revival, because this is one of the key things which have shaken up the industry, and it's making its competitors, Ultratech and Shree Cement, work a little bit more harder. And it's commendable what Ultratech is doing. They're working like a perfect, well-oiled machine when it comes to organic expansion, uh, selling those high volumes, and also they're doing good acquisitions. Now, this is what the scorecard for Adani looks like after 2 years of acquisition of Ambuja and ACC. It was announced in around May, and by the time they were in settle, it was like September. So September 2022 to September 2024, we are almost 2 years away. Now, in these 2 years, they have increased the capacity by 32%, which is quite commendable. They have gained market share. Their plants are running at full 90-100% capacity utilization. So they've done extremely well on capacity increase. Their target is 140 million ton by 2028, which at one point in time looked unachievable. But now having made strides, and if they can swing one or two good acquisitions their way, probably 140 million ton is still not out of reach. In terms of cost, they have attained cost leadership. So today I'll show you some charts and we can discuss there. But they've done solid reduction in power and fuel cost and freight cost, the two main costs which uh, are important for cement sector. And balance sheet, meaning they've infused 20,000 crore in the balance sheet of Ambuja and made it really, really solid. They are geared up to reach 140 million ton capacity, and doesn't look like they will be strained for cash any point in time. Now, this is the cost per ton trend. So the black line is ACC and the gray line is Ambuja. So Ambuja was always, a little bit competitive as compared to The rest of the, like ACC. ACC was always the ugly thing. But can you imagine even ACC is doing cost per ton better than Ultratech now? And Ambuja has actually gone below Shree Cement. And these are based on FY 25-24 numbers. Things can change because there could be some timing difference between when the high cost coal went out of the system for some of these companies. But to have achieved what they have achieved is quite commendable. And when I look at EBITDA per ton, when I look at the EBITDA per ton drop from FY 21, because things have dropped actually. So in FY 21, if ACC was doing 972, in FY 24 they did 830, so drop of 142 rupees per ton. Ambuja saw a drop of 190, Ultratech 269, and Shree 244. So today, when I think of Ambuja and Ultratech, actually they are on par because Ultratech profits contain the profits of white cement. So if you take that 100 rupee per ton out, it's kind of same as what Ambuja is doing. So on profitability, now they are virtually on par with Ultratech. Maybe they need to do a little bit more, but I think they're right up there. Now, in terms of stock price return, also Ultratech has been the leader, but Ambuja has not been found wanting, despite whatever Heidelberg tried and the big crash that you see into 2023. Um, Maybe it was good thing to happen because Ambuja stock price was running well ahead of fundamentals, but now fundamentals have caught up and things have done. So apart from the recent underperformance that Ambuja has seen, uh, it's largely going neck to neck with the industry leader. Now, is it time for consolidation? Meaning, only day before yesterday, I think this news came out that it's still not confirmed by the company, but if the names of the bankers are given to such precision, there would be something in the making. So what they are talking about is a possible merger between Ambuja and ACC. Now, under Adani, Ambuja and ACC is working very cohesively, and bulk of the synergies have already been taken out because they are working under one promoter, one agenda. But there are still few things, which can, this merger help. One is ACC is still trading at a valuation of, around 100 odd dollars per ton. So when you are scouting the whole world for acquisition, why not take out the minority interest in your own asset, which you know very well? So one is that they need to take out the minorities in ACC. The other two companies which they have recently acquired, so Sanghi also they own around 60 odd percent. They need to take out the minorities there, so maybe merger is a good option. Before the capacity in Sanghi is expanded dramatically from 6 million ton to 15 million ton, which is what they are planning to do. And Penna Cement is a 100% subsidiary, so it doesn't really matter much. But ACC and Sanghi can be a big boost for Ambuja as they scale up in their capacity and in terms of profitability. Sanghi could be one of the lowest cost producers in the country, and their advantage on cost for clinker is close to 800 rupees per ton, even as compared to Ambuja Cement. So it is very important that while they captured the profitability of Sanghi in Ambuja through an arrangement, they are giving only tolling charges to Sanghi Industries. But better would be to merge it. So synergies are largely taken out when we talk about this potential merger. There could be a little bit more to come through. There would be obviously some duplicacy in manpower and some of the other things. Plus there would be lesser trouble in transfer pricing, etc. So a merger could be one of the big triggers for Ambuja Cement in the futures to come. Now, this merger is whether it's happening or not, but the preparation has been going on for last 2 years, looks like, because ACC has been massively underperforming Ambuja, and maybe that was part of the plan that they ramp up capacity of Ambuja organically and inorganically, and so that ACC, is available at a steeper discount. Obviously, they'll use the Ambuja share currency. Currently, the stock shareholding in Ambuja of Adani is around 70%. So they have a good leeway. So even if at the current price, the dilution will not take them more than below 60% or so. So this appears to me that the merger was in the making for some time, and maybe when the company comes out clean on this, we'll have more information. So this is the transformational map which they've been pointing out. You're well aware, meaning 68 has already gone to 89, and now so they are running at 16% CAGR. Uh, EBITDA per ton, they are still after the correction. They went up to 1200. In the one quarter, I think they even touched 1400. But now they're back to around 800 odd. So they are planning to go to 1470. So the fallout of all that consolidation that we are seeing, we would need only three players to sit together and have maintained the pricing. So suddenly we can have, and the ROC target that I was mentioning from 13-14%, they are also targeting 19-20%. So what Adani is targeting, if Ultratech also thinks in a similar way, this industry is in for very good times post the consolidation. So maybe things can remain a little bit like this for another few quarters. There would be a seasonal bounce going into this year, but if they were to, but I think in a year's time we'll have a lot more clarity because some of these targets that I spoke about would be taken out, and then there will be no real incentive to keep prices lower for both the parties. So we have some window of opportunity to accumulate these kind of stocks. So capital efficiency really matters. So ROC is important for your EV EBITDA multiple to really move up. And Ambuja is doing everything for it to really move up on that scale. So there's a re-rating potential further from what we have seen right now. And you guys are at Go India Stocks and Smart Investing starts here. So I'll just stop here and see if you guys have any questions. And I hope I haven't put you into afternoon siesta after your big lunch. Yeah, Jinesh, you go ahead. You can ask your question.
Rakesh, is my voice audible?
Yeah, it's audible.
So I just want to understand you have covered only few cement stock. I want to hear from you more about Star Cement, who is a predominant player towards the eastern region, and they are producing cement as the lowest cost. This is what one of the article I have studied about the Star Cement. Moreover, many companies nowadays in cement industry they are also putting up plant. They are getting the government incentive like the CGST, SGST, etc. So, could you please elaborate your view, particularly on a Star Cement? And I want to hear from you. Do you have any idea what about the infrastructure growth and cement demand is going to increase in Pan India or particularly towards the Eastern India?
So, see, if I've understood correctly, are you asking about the drivers of cement demand and particularly infrastructure? So, infrastructure cap, or rather I would say the fixed capital formation um, went down from around, I think, 24% to 14-15% um, from 2014 to 2000. Rather 2012 to 2017-18, and has started to go up again under this new government. They have been focusing on infrastructure development. Only in the last 6 months things have been a little bit low on that front. Government hasn't been really spending too much. They are 20% behind on their capital expenditure plan. But I think in the second half, things are going to pick up quite dramatically because as we get into busy season, we will see all these, order inflows coming through. So I think, demand-wise, we don't really need to worry too much on the infrastructure side. Real estate also sector is going through, an upcycle. We are into third, fourth year of a real estate upcycle, but probably these upcycles last 8 to 9 years. So we have another runway of 4, 5 years for the real estate cycle. And third, coming to, rural demand and housing demand from rural India, it's more seasonally impacted. So this time monsoon is good. So I'm expecting that even rural housing demand should be okay. Retail and other commercial assets are buzzing, meaning the demand, the inventory levels are extremely low for both commercial assets. So overall, when I look at the demand picture, that's why I'm confident saying that we'll be growing at 8.5%, which I projected in my this thing. Can we do double digit? It is possible in some years we might even do double digit growth. Does that answer your question, Jinesh?
Yeah, and what do you see about the cement price will settle in H2 this year? About mostly, and what is the current utilization of all the cement industry and the capacity we have as on today?
So currently the capacity utilization is closer to 68% or so. And cement prices last year averaged around 385 rupees per bag. They have come down to 363 in the Q2. Recently, we have seen 10, 15 rupees price increases, and some of them are stuck. So probably we are back to 375 or something. And in Q2, I think we'll go back to 385 by Jan Feb. But for the average for the year against 385 last year, we'll end up slightly lower. I think our average would be between 375 to 380. But costs have also come down. So probably we will easily do 1,000 rupees per ton on average for the larger companies.
Okay,
Yeah. Thank
thank you,
you.
Rakesh.
Yeah. Sakeji, you can ask a question.
Yeah, Namaskar Rakesh ji, and thank you for the description. Sir, when we look at the cement space, things are very different geographically for north and south. So when you spoke about utilization levels at 68%, I think so the north and the western markets are commanding higher in the higher 80s or closer sub 80s, and the southern will be much lower. So if you could just dwell further on the same कि डिस्ट्रीब्यूशन कैसा है जोग्राफिकली, और सर ये जो साउथ का ये जो मैट्रिक्स है जिसमें ट्रेडिशनली बोलिए हिस्टोरिकली बोलिए दे हैव रिमेन्ड इन दैट लल फॉर अ वेरी वेरी लॉन्ग टाइम. सो what is actually affecting the suboptimal utilization levels for southern, and how are things going to shape, especially with now India Cement in the Ultratech and bucket? कैसा रूपांतर आप देख रहे हैं सर इसमें?
Okay. So see, basically cement capacities come up at places where there's a lot of limestone available. So limestone is in bumper quantity in Andhra and Karnataka. And in central India, there's hardly any limestone. Central India, when I mean, UP, there's hardly any limestone in UP. MP, there is a little bit of limestone. Bihar also no limestone. On northern side, there's limestone in Himachal and Rajasthan. On eastern side, there's limestone available in Chhattisgarh and a little bit in northeast. So when you look at limestone availability, it's hugely abundantly available in Tamil Nadu, in Andhra and Karnataka, and that's why disproportionately a lot of cement companies capacities have come up in South India. Now, I purposely avoided, regional demand supply balances because I consider these regions like a cycle stand. If one, region gets into oversupply, they are going to push material into others. So South India, people can reach from Andhra to Calcutta by train at 1,000 rupees per ton only. So it's not really a big deal. You can really push, excess capacities to neighboring regions, and that has a cascading effect. Now, what is happening is that the consolidation in South India was very low because there was a saying that in Andhra Pradesh, Even a dental doctor would put up a cement plant because his father or uncle was in, politics, and they got a limestone mine approval. There were so many limestone mines available, so they got those approvals, and they put up small capacities. So there's a mushrooming of, small cement capacities. Some have grown, but most of them have, remained small and are actually dying, kind of thing. But with all this acquisition that we are seeing, India Cement, Penna Cement, and probably we see few more, like Orient, and Kesoram has also been taken out. So all this consolidation would mean that, in any case, cement prices don't really move too much by demand supply alone till the time capacity utilization is above 85%, which looks unlikely the case because our companies are expanding quite aggressively. So they have to depend on supply discipline to maintain prices. And with the larger players taking a bigger share, once they have taken out all the smaller players, probably prices would move up. So you don't really need to worry too much about capacity utilization in South India. We just need to pray that, Birlas and Adanis think rationally and make some money, and we also make money in the way.
Sir, when you selected the space, you mentioned about Ultratech, Adani Group, and then the Sri Cement part. But if we take this subcategory of 20 million, 50 to 20 million, we have major players like Dalmia Bharat and Birla Corp also in the annual, wherein they have also showcased strong EBITDA per ton, and are also shown that they have their intent to grow. जैसे सर बिरला कॉर्प ने रिलायंस के एसेट एक्वायर किया, एंड देन दे हैव मूव्ड अप द कैपेसिटी आल्सो. अभी 25 मिलियन का उन्होंने गाइडेंस दिया है, फ्रॉम 20 to 25 की जर्नी है. डालमिया हैज बीन आउटलाइनिंग हाउ दे विल रीच 100 मिलियन बाय 2030. So these companies will have also have greater relevance than compared to the three which we have worked out, जैसे आपने बताया. तो कैसे सर इसको इस प्ले में, वैल्यूएशन के प्ले में, हाउ डू वी रैंक दीज टू प्लेयर्स आल्सो, डालमिया एंड बिरला कॉर्प? बिकॉज सर जैसे आपने बताया कि नॉर्थ में हमारे पास लाइमस्टोन की अवेलेबिलिटी नहीं है, बट बिरला इज द मेजर प्लेयर इन सेंट्रल इंडिया एंड ऑल द मार्केट जो आपने मेंशन किए, वेदर यूपी, बिहार, they have a dominant market share there, and these are deficient, cement deficient. इनकी कैपेसिटीज 90-95% में रन करती है इस सारे रीजन में. सो ये मैथ कैसे वर्क करता है, और ये दो प्लेयर्स पे आपका क्या थॉट प्रोसेस है?
So see, these players are doing quite well in what they are doing. So it's difficult to think that they will be taken out, and their expectation of valuation is also very high. So they don't come into the bucket of acquisition targets. They will remain, what they are doing, but will they become dominant and become really, big enough? That is yet to be seen. Meaning, obviously, they will grow at 7-8% in line with industry growth at the max. But historically, I've seen that most of these players have been losing market share. They have not been able to grow as fast because the larger players are growing not only organically, but they are also growing inorganically. So they're growing at double the speed, and that's why if you're trying to play a less risky bet, probably it is better to stick with larger players. But there will be opportunities. I'm not to say that Birla Corp or Dalmia, one cannot invest on those. But you need to really time them and be sure that they are coming out of their capex cycle before you put your money there. So yes, and those stocks also don't look that cheap, meaning they are cheaper than the bigger ones, but not ultra cheap. Does that answer your question, Saket ji?
पर्सपेक्टिव वाइज आप बता रहे हैं कि आपका पर्सपेक्टिव क्या है, बट अगर अगर ये जो टाइमलाइन सेट है बड़े प्लेयर्स की, एंड दे आल्सो मूव इन द सेम सेम, तो ये फ्रेगमेंटेड स्पेस और 5-7 प्लेयर में कन्वर्ट हो जाएगा, रादर देन मेजर 3 प्लेयर की बात को जैसे हम उल्लेख कर रहे हैं अपने अपने डिस्कशन में. आई थिंक सो 5 to 6 प्लेयर्स रहेंगे, जिसमें डालमिया भारत का भी डोमिनेंसी इज नॉट गोइंग टू लिंगर डाउन, बिकॉज उनका कुछ होल्डिंग कंपनी का एंड अदर का इश्यूज है, जिसके कारण से करेक्टली वैल्यूड नहीं हो पा रहा है स्टॉक. एंड बिरला कॉर्प हैज इट्स ओन लीगल बैटल वाला इशू, जिसके कारण से वैल्यूएशन दोनों को नहीं मिल रही है. बट अदर देन दैट, एफिशिएंसी एंड ऑल फ्रंट पे सर वी फाइंड दैट कि आप नॉन ट्रेड ट्रेड मिक्स देख लीजिए, ब्लेंडेड सीमेंट देख लीजिए, दे आर हैविंग एन एज ओवर इवन अल्ट्राटेक एंड ऑल, अगर स्पेसिफिक ज्योग्राफीज में हम जाएं. So that was
Yeah,
my
yeah.
understanding, sir.
Sagar, I totally agree with you. Meaning there are places like I would have invested into Dalmia Cement even now.
Hmm.
But when I look at the way execution is happening at probably Ultratech or Ambuja, I think Dalmia. So some of the problems with Dalmia specifically is that they have bought really substandard assets.
Okay.
So like Mulli Industries, I'm not sure even if they have limestone. They bought at a very cheap price. Similarly, they have bought, I think, a few more assets. I don't remember the names. Like I think Kalyanpur Cement they bought. Uh, all those are, assets which are not really good and might take longer to turn around. So optically on EV on the capacity front, it looks large, but they will have some difficulty turning around those assets. Number two, when I look at Dalmia's earnings, it's all over the place. And sometimes it's difficult to really figure out what they're doing. So that is my issue with Dalmia Cement. Why I didn't include it in the, I could have taken top five, but I purposely avoided Dalmia. And then coming to Birla Corp, you rightly mentioned, meaning there is that overhang. While nothing is going to happen, but so it could be a trading play in between. But will they get re-rated to that 15, 16 time EV beta from 8 to 10 time, which these guys are trading right now? Doesn't look to me will happen in a hurry.
सर लास्टली जो आपने एसीसी अंबुजा वाला जो प्ले समझाया था, दैट इज वेरी वेल रेलिवेंट टुडे कि व्हाई इज एसीसी ट्रेडिंग एट सच अ स्टीप डिस्काउंट. दैट मींस they have planned it out in a way that only now the announcing part of the story is left. Otherwise, that the valuation part also, at the price at which ACC currently trades, having EPS of above 75 to 80 rupees last year, the stock barely trades at 2300 also. So अगर हमें उनके ग्रुप के में इन्वेस्ट है तो अंबुजा इज द बेटर प्ले ओनली बिकॉज जो भी वैल्यू बनेगी आगे जाके, that would all sublime to Ambuja only, and ACC should be an avoid then.
See, obviously we've seen it's AC's underperformed Ambuja in a big way.
Ji.
And going forward, also bulk of the expansions are coming in Ambuja. All the acquisitions are coming in Ambuja. So Ambuja is becoming a much bigger company as compared to ACC. And so that re-rating of ACC may not happen even if the merger doesn't go through. And so I would say that if it is a choice between Ambuja and ACC, there's no two thoughts about it. It has to be Ambuja. You have to be aligned with where the promoter is sitting. It's not just for Ambuja and ACC. It's true for any other company also. You always align yourself where the promoter has majority stake.
Right. ठीक है sir. I'll join the queue. Thank you.
Sakiji. So Jatin is asking, how do we look at the land bank that usually cement companies hold? Jatin, don't even think about that and don't go on that line of land bank. First of all, these plants are in remote places because they are next to limestone mine and hardly have any value. Maybe, some grinding units which have come up near the city might have, some value, but the way these valuations are, land will become very insignificant portion. So you have given a case of India Cement. I'm not sure if Ultratech is buying it for land. India Cement, they just want to block 16 million ton of capacity going to their competitor. And maybe they've overpaid for that thing. Meaning I think it is a very sub-quality asset. I totally agree with you. And I'm not sure why they overpaid so much. This could be a thorn in their neck for some time. But let's see. It's going to be 200 million ton capacity and 5-10 million ton substandard capacity. They can deal with it. So Jinesh is asking, need to use Star Cement. Yeah, so Jinesh, Star Cement has huge advantage because they are into a region which is landlocked, and and they get a lot of subsidies. So government provides 90% transport subsidy. So they get 90% of the freight cost back from the plant to the nearest railway siding. So that is one. Plus they get cheaper coal and everything out there. Um, so Star Cement is doing, reasonably well, and they're expanding their capacity. Just a disclosure that I own Star Cement for a pretty long time. So I'm positive on that name. Harshit is asking about role of solar power and lower energy costs in the industry. So Harshit, the cement industry is dependent on coal for its process, and so they are capturing that hot gases which come out from the system and using waste heat recovery initially. So that was the first point of call. Now they are adding some solar power. So yes, solar power costs are going to be important. But will it lower the energy cost dramatically? I don't think so, because most of the guys are on waste heat recovery, which is zero. Plus, they have their captive coal block thermal power plants, which is also like 3, 4 rupees, 5 rupees at the max cost of power. So, unlike sectors or companies which are on grid power, which cost you 7 to 8 rupees, and they shifting to solar is a massive, massive impact. But for cement industry, it will not be impact too much. So I hope, Parshit, that answers your question. Then I've got Aditya who is asking, India Cement will merge with Ultratech post acquisition. Aditya, I think it is going to take longer. They would have, taken a leaf out of Adani's this thing. They will let India Cement, stay where it is for like 2, 3 years, and then probably merge it at an appropriate time. By the time Ultratech would have gone to its like 15,000 or 20,000 rupees, and that is the only way they will be able to reduce the cost of India Cement acquisition. So I would think the merger with Ultratech is a far, far away at the moment. If you're holding India Cement, I think best to exit and look for better opportunities. Jatin is asking acquisition valuation on Orient Cement. So Jatin, I think it can happen closer to $100. Plus, they have a mine in, I think, Rajasthan, where they are getting a forest clearance. If they get that, maybe there will be like 400, 500 crore value for even that mine. So overall, I'm optimistic. When if I were to take a guess, it would be around closer to 400 rupees per share, 375 to 400. Harshit, follow-up question on solar. Does green cement factor in Harshit, green cement and all that will come in. Initially, they are focusing on, waste heat recovery, and obviously now the solar is already, part of the plan. Um, will it become carbon neutral? They'll have to do a lot of work. So globally, Wholesome has sold this beautiful business in India at a cheap discount because of all this issue on carbon. But Indians are not really bothered at the moment. Maybe 10, 15 years down the line, they might think a little bit more. At that time, maybe carbon capture is the only thing which can be done for in cement if they want to go zero, carbon dioxide. Sagar is asking, can there be intervention from CCI? Okay. So Sagar, there are set rules for how much capacity one can have in one region. So it is like per state, they can have 30% kind of market share, but that is only for inorganic acquisitions. For organic, you can increase capacity. There's no CCI approval kind of thing. So maybe they will be selective. The top two guys have to take 60% in any kind of state or any, region. Both can have 30-30. So obviously, one player reaching that kind of limit would let the opportunity go to the other guy. Siddharth is asking, given the expectation of infra portion AP, why are NCL and Deccan trading as such? So Siddharth, it is not one-to-one trade between demand for cement and cement companies in Andhra getting all the business. There is oversupply. They will get their share, but it doesn't really move the needle as much. And but I'm hoping they get bought out given their valuations. It could be that there's a big mismatch between what they want and what the buyers are willing to pay. Maybe buyers are willing to pay 70, $80 and they are looking for 90, $100. So that could be one of the reasons, why deals haven't really happened. And then there are smaller capacities. So, buyers are also not really too excited, and it's not a must-do trade for them. Any significant plans for JSW Cement? So JSW also has big plans, but at the moment their capacity is very small, and largely what they're doing is granulated slag, which they buy from their sister concern JSW Steel. So they are not a big enough player at the moment. And having pulled out their IPO, I'm not sure if they have enough funding to really go aggressive. So they're also one of the players, but they are not a player of significance at the moment. So I hope I've answered all the questions. Anybody else who has any question, I can take it now. Okay,
सर
so yes, Sagar
यस
ji.
सर, ये जो लिंक है जीडीपी ग्रोथ के संग में सीमेंट का, इसमें सर सैचुरेशन आता हुआ कैसा दिखता है? मैंने जो पेस से द पेस विद एट विच 2004-5 the contribution from cement was, do you think this with the same pace this multiplier effect of 1.5 times which most the cement players mentioned, there is so much of demand and the capacity that will get utilized even at the pace at which the total cement capacity for the country is. So where is this incremental part of the story? There is housing project and things like that, but they have grown pace for the last decade also. तो ये कहाँ दिख जाता हुआ दिख रहा है सर? टोटल कैपेसिटी क्या लगती है 2030 में सीमेंट फॉर द कंट्री के लिए सर?
So, Sagar ji, we are just starting only.
ओके सर.
अभी तो our per capita consumption is around 280 to 300 rupee, kg per capita. For world average is around 550. So our per capita thing has to double from here on. That is number one. Just to give an example, China adds 100 million ton of capacity every year. We are at 500-600 ton. They are at 2 billion tons. तो अभी दिल्ली इज बहुत दूर है अभी. So
Right.
yeah, so there's nothing to worry on the demand front. I think demand is doesn't matter for next 10-20 years.
Okay, so we have to look for efficient players जिनके पास लाइमस्टोन की अवेलेबिलिटी हो, कॉस्ट एफिशिएंसी रहे, और जिस रीजन में वो ऑपरेट कर रहे हो वहां पर उनका एक डोमिनेंसी रहे प्राइस के फ्रंट पे. ये फैक्टर्स को ध्यान रख के सेट इन्वेस्टमेंट में जाना चाहिए. इफ वी कीप द लार्जर प्लेयर्स असाइड, अल्ट्राटेक और आपके अडानी वाले ग्रुप को हट के अगर जाते हैं, तो क्या क्या फैक्टर्स को ध्यान रखें सीमेंट के इन्वेस्टमेंट के?
तो आगे जी अभी जो जैसा मैंने बताया, the risk factors are extremely low in this sector. So you have to buy when the stocks are going through seasonal dips. तो उसमें अब आपको बिरला कॉप पसंद आता है या नवोको पसंद आता है या अल्ट्राटेक पसंद आता है, वो
चॉइस
हो
हमको
सकता
करना
है.
है.
वो फ्लेवर थोड़ा ऊपर नीचे हो सकता है, बट
जी.
सीमेंट का प्राइस इतना गिरने वाला है नहीं.
हम्म.
And larger companies ही प्राइस कंट्रोल करती हैं, तो दे आर नाउ गेटिंग मच मोर कंसोलिडेटेड. एंड आज अल्ट्राटेक ड्रॉप्स प्राइस बाय 10 रुपीज पर बैग, विच इज 500 रुपीज पर टन. उसका आधा प्रॉफिट उड़ जाएगा. So I don't think larger players have in their interest to keep prices low enough. Consolidation is going to happen there, but there's only like 50-70 million ton of capacity which is still left to be consolidated. So once there's not enough left also for consolidation after we are done with this round in next 12 to 18 months, I think people will focus on more profitability, and ROEs will expand to 20%. That is what I think in the next 2 years, 3 years time. So it is a buy and hold kind of a thing. You can buy whatever you feel like, but larger players give you guarantee that they will grow and they will not lose market share. Smaller players, you really have to be sure about their capex plans and everything.
Thank you, sir. And thank
Thank
you
you,
for
Sagar ji.
all the advice. Thank you.
Yeah, Dinesh ji, I can take your question.
Yeah, Rakesh, I want to understand why the cement price are always lower in northeast region as compared to west, south, and central of the India.
Dinesh,
Because
it all depends on the freight cost.
okay, because it seems the demand is not adequate in the northeast, whatever the capacity is there, and that is why they have to sell their product from northeast to the central India side. Is this a right understanding?
Then from northeast, you are saying?
Yeah, northeast,
Uh,
I'm saying.
Northeast, the cement has to travel a lot to come to eastern sector, largely Bihar, Kolkata, and Jharkhand. So, so the question for them is to sell to such far off distances or sell locally. So there could be some pricing difference because of the freight cost. But what you need to look at is, you check the cement realization minus the freight cost for each company.
Okay,
And that
because
will give you a better picture on.
particularly about the Star Cement, their capacity utilization is not much, although they are increasing their overall capacity for clinker and others, and they are going to add more than 50% of their total capacity in next 1 or 2 years from now. But I am wondering how they will be able to sell the entire capacity what they are going to set up.
Yeah, that is a challenge for smaller companies, and that is the reason they trade at a lower valuation. In fact, companies like Ambuja and ACC, when they're expanding so fast and there's been a change in the management, for even them to sell material is very difficult, and Ultratech has been extremely aggressive. So things are not easy. That smaller player, can increase capacity and everything will sell. They'll have to sell at a discount, and that's why you see that 300 rupees per ton differential in EBITDA per ton of top five players and the rest of the companies. Yeah.
Can you also elaborate your views, because some of the cement companies have started focusing more on the premium products. Like Star Cement is also one of the player where they are started making the tile adhesives or similar kind of product which gives the better margin. So,
Hmm.
can you please elaborate your view about entire cement sector? Which are the companies which are focusing more on the premiumization as of now?
Dinesh, premiumization is all marketing gimmick, and that will get you only 1 rupee, 2 rupee per bag more.
Okay,
So premiumization is not the key driver. It's a bulk commodity. Meaning premium, how much can you sell? You are trying to sell 500 million ton. आधा मिलियन टन बेच दिया और 1 मिलियन टन उससे कुछ नहीं होगा.
okay, okay,
Yeah.
understood. Thanks,
Yeah.
Rakesh.
Anybody else?
Sir,
Yeah, Mr. Modi,
hello.
you can.
Yes, sir. Sir, can you throw some light on JK Lakshmi Cement, sir? And they have also announced the merger with Udaipur Cement. So, how they are expected to do?
So see, JK Lakshmi is an old brand and they have revived Udaipur Cement. I haven't really looked at in detail, but it has been a material underperformer. Of late, their name has been coming up in media for a possible, acquisition. It's trading at reasonable valuation, so that is not a challenge. But that is the problem with all mid-sized companies. They look cheap, but they are value traps. They don't really, give you as much return. So, I mean, I can't really answer too specifically on JK Lakshmi, but generally, I would say that they've been underperforming quite massively.
Okay, sir. Okay, sir. Thank you.
Okay. Anything else? So, if there are no further questions, I think I'll stop the recording and thank you everyone for all your time. And feel free to reach out to us if you have any questions. Thank you.